What's up, everybody? You would have to literally be living under a rock to not know how unaffordable housing has become in our country right now. Interest rates are near 8% and home prices are still super high. So the big question is, can you actually afford to buy a house in today's market? So today, we're gonna break it all down for you. The good, the bad, and the ugly. What your budget needs to be, how much money you actually need to make, and what the real cost is to buy a house so you can see if this is something you're able to do right now. So let's dive right in. According to the Federal Reserve Bank of St. Louis, the median sales price of a home as of the second quarter of 2023 is $416,100. So let's make it easy and round down to $400,000. Now I know some of you live in a place where you would be thrilled if the median sales price was $400,000, and I get it. Where I live right now today, the median sales price is $800,000, and maybe we'll do that in another video. But for today, just hang with me as we go through the numbers to see how much you need to really be able to afford a $400,000 house without selling off your children, although I do have a teenager at home still, so if anyone's out there, that's fine. Or being so house poor that you have shelter but no money to live on and enjoy your life. So let's start with your mortgage. There are 4 or 5 components of a mortgage. Think of the acronym PITI.
But I pity the fool.
Principal, interest, taxes, and in this case we're talking about real estate taxes, and insurance. And in this case we're talking about homeowners or hazard insurance. There could possibly be a 5th component, which is private mortgage insurance or PMI, if you're putting down less than 20%. Out of these 5 components, if you get a fixed loan, the principal and interest will remain the same amount for the length of the loan. Each month they'll vary on how much is going towards principal and towards interest, but the actual number amount will be the same. As for your insurance and property taxes, they can change from the original amount. Your property tax is based on the assessed value of your property, so if your property goes up in value, which we all hope, your property taxes will go up as well. Every state has a different property tax rate, so definitely check your state so you can get the most accurate number for your budget. So for our example of our $400,000 house, we're going to use 1% as the property tax rate, which is the average property tax according to bankrate.com. So 4,000 divided by 12 will equal the monthly payment for your property taxes. According to insurance.com, the average amount for home insurance for a $400,000 house is $2,942 a year. So for this example, let's just round up to $3,000. So 3,000 divided by 12 equals our monthly payment. You guys still with me? We're getting to the good stuff. Keep in mind, all states are not created equal when it comes down to home insurance. Every state has different risks that impact insurance rates. According to bankrate.com, the state with the lowest home insurance is Hawaii, and the highest is Oklahoma. So check with your state to find out what the average cost is for your budget. Even right now in Florida, I heard that these home insurance rates are astronomical because all the severe weather they've had down there. So definitely check with your state so you have a more accurate number. As for your mortgage insurance or PMI, this is generally required until your loan reaches 78% of the purchase price. So if you're putting less than 20% down, you definitely want to add this number into your budget, which will vary depending on the type of loan you get and how much money you're putting down. According to Freddie Mac, for a $400,000 house, the PMI will range from $95 a month if you're putting 15% down to $365 a month for 5% down. For our example, we'll use $200 a month. And like I said, this does go away once you have 20% equity in your house. It will usually take around half the length of the loan, so 15 years before that number goes away, unless you allocate more money towards your principal amount each month, or some people make one extra mortgage payment and allocate it just towards principal a year to shorten the length of the loan. But that's for another video. So to review, so far we have $330 a month for property tax, $250 a month towards home insurance, and $200 a month towards our PMI. Now we need to calculate the principal and interest. We're gonna use a mortgage calculator from bankrate.com. There are tons of mortgage calculators out there, and feel free to use any of them. I'll put links to everything that I use in the description so you'll have easy access to it. This is a good time to remind you I am not a lender nor a financial advisor, and interest rates can vary depending on your particular situation. This is purely for educational reasons only, and I will put links to all of the sites I use to get these numbers in the description. To really know your specific numbers, you should contact a local lender and give them your information, and they will provide the numbers that are most accurate for you and your situation. For our example, let's go over bank rate is showing us for today in October of 2023. Home price, $400,000. Down payment, 5% or $20,000. Interest rate, 7.78%. Ouch. Principal and interest, $2,730. Let's add in our other numbers, $333 for property tax, $250 for home insurance, and $200 for PMI, and we get a total of $3,513 a month. Please keep in mind, these are averages. Your property tax, your home insurance, your PMI, they can all be very, very different depending on where you live. So let's move on to your other living costs. The idea is to divide your income into 3 categories, spending 50% on needs, 30% on wants, and 20% on savings. 50% on needs such as housing, groceries, bills, utilities, health insurance, car payment. The 30% on wants are things like travel, entertainment, restaurants, shopping, and hobbies. And the 20% on savings is for things like retirement, investments, debt, credit cards. So let's break it down even more. So these numbers are averages. Only you know how much you spend on each category, but this will give you an idea. So let's start with our 50%, our needs. Well, the first number, housing, we have that number. That's the $3,513. Groceries, I put down $400 a month. Utilities, $400 a month. Health insurance, $350. Car payment, $300. And gas, $100. Like I said, if your numbers are different than mine, just plug your numbers in under each category. For the 30%, we have entertainment, put $200. Cell phone, $100. Internet and TV, $120, because you have a couple different streaming services. And a miscellaneous, another $100, maybe something I haven't thought about. And then for your 20%, we put $200 towards your credit cards, and another $200 towards student loans. So I didn't put anything towards investments or savings yet. This all totals to $5,983. Let's round up to $6,000. So 6,000 times 12 is $72,000, which you have to net after taxes in order to pay your expenses. But remember, we don't want to be house poor, and we haven't allocated any money towards an emergency fund, which you really should have 3 months to cover your expenses just in case you need it. So let's go back to the mortgage, because the rule of thumb not to be house poor is that your mortgage should not exceed 30% of your income. So to figure that out, we divide 3513, that was our mortgage number, by 0.30, 30%, and that equals $11,710. So in order to live comfortably and not be house poor, you need to bring home $11,710 a month, or $140,520 a year. Remember, this is what you're bringing home. In order to figure out your gross income, if we assume your net income is 75% of your gross income, we take the monthly net and we divide it by 0.75. So 11,710 divided by 0.75 equals 15,613. 15,613 times 12 equals $187,360, which is a lot of money. Now keep in mind, this is to live comfortably and not be house poor. So I know this seems very overwhelming, and my numbers are arbitrary. So take them and adjust to your lifestyle. And not to further depress you, because you're probably throwing things at me at this point, but it does cost money to buy a house. You've got your down payment and your closing costs, and you have inspections and appraisal. With the $400,000 purchase price, it will cost you, give or take, approximately 3% of that towards closing costs, plus your 5% down, and then your appraisal and inspection. $20,000 for your down payment, plus the $12,000 towards your closing costs, $500 for an inspection, $500 for an appraisal, and that equals $33,000. If I have totally depressed you, and I'm really sorry if I have, take a break, take a breath, go have a drink, take a walk, and then come back and look at my numbers and plug in your own numbers, what you think is right for you. And then call a local lender, give them your information so they can give you the appropriate loan numbers to plug into your budget. I hope you found this helpful. Remember, it is for educational purposes only, as everybody's situation is specific to them. If you are having a hard time with this and you're thinking, well, I'm just gonna move to a really affordable small town, check out this video I made. You may see something you like. Thanks for watching. I do appreciate it. Bye.